Welcome to the weekly chart review. It is Saturday, October 15th. We're going to dive into index and stocks. I'm going to do NASDAQ and the Dow Jones today. We'll show how these last few days have all that volatility that happened with the CPI and PPI coming out and how it affected the stocks. All right, and yeah, so you know what? Let's just dive into NASDAQ first. I want to show you my long-term projection here, where it's been sitting. So as you can see, over the last few weeks, there were several longer gaps that have closed off. But more than anything else, it's been day-to-day gaps have been closing, right? So all the green lines. So let's start with maybe all the way back to where it started dropping here on the 12th of September. All right, so we've had two imbalances that formed on that day when on the 13th of September there was data that was released, right? So because of that, long progressive drops in the market week over week, and every time we thought there was going to be a rally, just reversed the other way, right? Started dropping even further. Well, I don't want to say we. This is my prediction. It's been going to be dropping until about 2 days ago on Thursday. Thursday is when we saw a bit of a reversal even after data came in. Right, so data was weaker than it was on September 13th, and yet, you know, the market dropped over 400 points and then it recovered 600 to 700. So it was quite a day. But anyway, so from here I want to show that there's been two gaps that have been left open, three right here from the top. The only gap that I can see closing in the next few days, possibly over a week, is this one right here, which is about 400 points lower than the close on Friday, right? So 412 points. I don't think we're gonna get there, and again, I'm 90% sure we won't, just because of data being released, and now there's nothing going to be happening as far as news for the next 3 weeks. So this could be the sign of a short-term rally to close off a couple spots, right? Like 1, 2, 3 large gaps, maybe rejecting off this 610. 610 is the brown one. 987 is my black, off that EMA line before dropping further. Okay, but the majority of the time we can see that the gaps have been closing day after day, like in the span of a month, right? Because it's now October 15th. So there was, let's count the non-green. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. All right, so 24 trading days, 10 of those, the gaps did not close the day after. But really, the only gaps that have formed that were long, that didn't close within the week, were 2. Right, so 24 trading days, 2 of which closed past 5-day mark. One of them is still open, of course, right? It's right here. This gaps, they happened previous to the... Oh, it doesn't matter, right? Overall, what I'm explaining is that all the gaps that have closed were within a week's time, okay? So what I'm expecting, and this has already been past a week, so that's why that's going to be a blue. But again, with the sharp move that we had, and I'll zoom in on the 1 hour, so it'll be a little bit more clear. Okay, what we had, maybe even better on the 30-minute. Okay, so what ended up happening is data came out, this dropped instantly. And by instantly, I mean, I can even take it to the 5-minute and show exactly how that moved, right? There you go, that entire drop, a 5-minute candle. Okay, it peaked a little bit, and then the 5-minute was 387, well, technically 419 pips, and then it recovered a little bit. Okay, so from that point, and we started slowly climbing up. But it closed off the imbalance that this thing formed overall and just kind of went even higher. So judging just based off of those candles, all right, we've had a pullback the day after. And here it was, very large, right to its 50%, and it wicked off. And now you can see it closed right at that 50. So if I go on my long-term projection, and this is what I drew up 2 weeks ago, right? Because I haven't touched anything. I've just been pointing back to it, so feel free to check. Look how, it's crazy. I drew the Fibonacci before it even hit that area. But you see how close that was, right? Like I drew this box up. That's where the fib would have been at the bottom. So, I mean, as far as being close, that was insane, okay? So that's where it is. The bottom is actually here, right? Where are we going to do the bottom? Right here on the candle. All right. So there we go. That's what I believe would have been the bottom as I drew up before. So I have a feeling that we're going to be seeing a short-term rally. I don't think it's going to be lasting 2 months like the first one did, right? Like when we hit the low here to the high, it was 61 days. So yeah, exactly 2 months before we reversed. I have a feeling this one's going to be a little bit quicker. Maybe, yeah, I mean, it could possibly climb 17% within a month before dropping back off, right? That's kind of what I see happening. Maybe a little longer than a month. I don't really know the time frame. I have a feeling it's going to be a climb similar from the 1 to 2 leg, right? So this one happened when we hit our bottom to the top right here. I mean, you could see it happen in 2 weeks, right? It's a very good chance we're going to be seeing something similar. And then sort of a double top forming, you know, the M top before going lower. Yeah, I mean, it could take a month, it could take 2 weeks like we saw in the past, right? It's going to be a very, very quick move. I would say, yeah, that's kind of what I'm looking at. So based off of that, I want to show you the stocks of my choice this time. So Carnival, I mentioned a few weeks back that this is what I was waiting for to drop in. You know, it gapped down, so there was a few entries that I took, and then it dropped lower, and I averaged down. So personally now I'm like, once it climbed a little higher, I sold off, and it dropped lower, I bought more, right? So I averaged a pretty decent amount of shares at around $7.05. So for me to get Carnival at that price, I'm happy with it, right? I know that this is going to go higher. These earnings reports are still based off of a period where no cruising was happening, okay? And the other cruise lines are in the same boat. The problem with Carnival is that for its debt to asset ratio, it's almost a break even, right? So it doesn't really show incredible invest potential. Like banks don't really care if it goes down because it has the assets to pay it off. And at the same time, you know, it doesn't really encourage the banks to kind of throw more money at them to bail them out, right? To let them go deeper in debt to be able to climb out. So one way or another, I still believe that this is going to be climbing up. And a good sign is when the entire stock market is red, Carnival is green. It's the only stock out of the entire my entire watch list actually that's sitting positive. Well, HPQ doesn't count, but yeah, all right. So you see the 10-year bonds went up as well, but everything dropped, and some dropped pretty significantly. Carnival, I saw climbing. Oh man, how did the day go? Let's go to the 15-minute chart here. Okay, we'll just stretch that out a little bit. So as you saw those climbs happening on Wednesday, right? Thursday was when all that volatility happened. It kept climbing. Friday, it opened high at 742, dropped a little bit, but still stayed afloat while everything else dropped, right? NASDAQ on Friday, it dropped 2.9%. So how much is that? You want to know? It is 468, 470 points. And Carnival stayed kind of break even, right? Well, everything else started dropping even harder. The only thing I want to express at this point is just because um, we hit the bottom of the Nasdaq drop for this leg anyway. And again, that's what I believe, right? So if you disagree, then do what you need to do on your own. That's totally fine. Excuse me. But I believe this is going to be the point where a decent amount of money can be made. All right. So we saw the last time we hit the lows, even in Amazon, June 14th. Okay, right here on the low. Let's swap that to, where's my Nasdaq? I don't want to be, there we go. Okay, June 14th, right about there. Okay, so we are currently, well, let's say at the close. So we're 5% lower than we were at June 14th, okay? Now Amazon, from June 14th, is 5% higher. So what I'm getting at is if there's any stocks right now at the lows that have closed higher than they did in the June low, this is a good sign that it's a stronger stock, that it's going to be getting out of this hole much quicker, right? Apple, for example, let's see how they're doing, right? Same idea. June 14th or 16th, whatever, it was around here. And then we see that it closed off significantly higher, right? So let's draw it from there to there. So 6.3%, right? Decent amount. Carnival, right? Like I said, I'm bullish on Carnival, but the trouble is when it was June 16th here, we're definitely lower, right? By 20%. So it's really, the earnings didn't really help it, right? Like that's kind of what smacked it. Whereas Amazon and Apple, I mean, they're software and digital stocks primarily, so it's not affected as much as a hospitality industry. But anyway, so, I mean, I can jump into any other ones. Just please let me know in the comments, guys. Let's take a look at Dow Jones. Okay. We see that, again, June 16th was its previous low on the leg, and it's dropped lower since then, right? So from close to close, I mean, it even opened way down here previously, but you see the close and the open were almost on par with each other from October 13th and September 30th, so 2 weeks later. And yeah, I mean, overall, it went down 0.86% from that low to where we're at now compared to the Nasdaq. Okay, whereas Nasdaq is a 5% difference. However, let's take a look at the US 30 right here. Okay, so where we've been sitting at now, you saw that, and I drew this up a while ago, right? Like just based off of, you can see point to point here, not just seeing how it's been rejecting off that line. It broke through and rejected off the EMA, and now it's rejecting off the other side. So a good sign that this is going to be going lower. Quite possibly we could see a climb all the way to its higher band. May not be the case. There's the secondary channel that'll form, which is going to be kind of this area, right? You can see that it's pretty significant. So I could think that it might hit around this area before dropping even lower. Big imbalance to fill as well on September 13th, like it was on the Nasdaq. So yeah, I mean, both indexes are following the same pattern, very bearish overall, but it is due for a little bit of a rally. So you can see it rejected off that diagonal resistance line or support line, sorry, and it's been holding true to the Fibonacci channel line. Right, it bounced off it, kind of closed, and went right over it, and then tested it a few more times. So I believe that's kind of the temporary bottom that we've hit, right? Similar to where we were here, where it kind of touched and then bounced a little bit, So touched, 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 it's been bouncing in between these two. What's going to be very telling is when we finally close above this channel line right here. Okay, if in the next few days there's going to be any sort of close above this line, it's a good sign that we're going to be hitting this zone very shortly. Okay, so that's what I got for this. For fun, let's jump into, let's say, Roku. How's Roku doing? Roku is not having such a great time. There's no more real gaps to fill. It's been pretty rough on Roku. Let's go on the weekly. And, oh, actually, that's not true. There is a gap right here from 2019, 2018. It's a pretty significant one. And I think that's the last one that's left. All right, so if I take this and pop it right there, I'm just going to stretch it out because I know it's right there. Okay. And now let's tighten up that gap. There we go. That's a 36 as the top of the gap, and the bottom is 32. So very good potential that it could actually close this off. Let's see what it looks like on the daily. What have we here? Okay, let's tighten that up a little bit. There we go. That's better. All right, so that is the only gap that I can see that it could potentially drop to fill in the short term. Like even though Roku has been, or NASDAQ has been kind of going sideways and has a bit of climbs here and there, Roku's been steadily dropping this entire time, right? So as you can see, NASDAQ over the last few days, once it loads, okay, still going low, but every sort of pullback that this has had, Roku hasn't really done much. Just went sideways on those days and then keeps going down. There's been no EMA shifts on, well, that was the weekly, but the daily, it's been kind of all over the place, right? So if we go weekly and weekly, look at this, weekly on Roku, it's been rough. It hasn't shifted since August of 21, and everything has just been dropping steadily since then, right? Crazy sign, a big M right here with a lower EMA band. That would have been one crazy entry for a put, right? That dropped 86% from the potential entry zone. All right, let's see. NVIDIA, again, I predicted this was going to be dropping as well. Way back here around this 160, 180 area, around there. Yeah, and it just kept going. And now it's just sitting pretty on that Fibonacci channel line. But anyway, guys, I'm not going to be jumping into every single stock. You just seen, oh, DocuSign will be the last one. All right, so it did fill the gap and it dropped lower. I personally jumped in at around 45 a share. I'm happy with that for now. I see potential still with DocuSign, and there's massive gaps to fill as well. So we'll see how that gets going. Stop loss for this will be around the $40 mark. I'm not going to be risking too much. So yeah, that's kind of my position for now, I suppose. Right, COP and Oxy, they're going to be following the price of oil. So I mean, as those stocks move, it's going to be the same as U.S. oil, as you've seen. Not much of a crazy change. So just keep an eye on those. All right, on the Forex video that I do, guys, if you're interested in oil stocks, just check out close to the end of the video. That's kind of when I go over it. So hopefully it's been helpful. Hopefully you guys have been able to make some cash over the last few weeks with a significant amount of puts, when I showed what my targets were. And again, just for educational purposes only. This isn't to tell you to do one thing or another, right? I need to say that disclaimer so that if you make bad decisions, you don't blame them on me. But overall, folks, I hope it's been enlightening. Follow for more.